I spent 20 years building a real estate portfolio that was supposed to give me freedom in my golden years. But what I didn't see coming nearly cost me my whole retirement. And in this video, I'm going to show you exactly what I missed so you can catch it before it catches you. Hey, I'm Harry. I'm a grandpa and a pilot from the prairies in Canada. And for 20 years, I did everything the gurus told me to do to be a successful real estate investor. I bought the properties. I found the tenants. I let the rent pay down the mortgage. I built equity, retire comfortably, right? And for a long time on paper, it looked like that was all working. But there was a lot of things happening underneath the surface that I could see, but quite honestly, I really missed their significance completely. By the time I saw them clearly, the picture was really not so pretty. So today, I want to walk you through 3 specific warning signs that I missed as a rental property owner over 50. Because if you are in this game and retirement is getting close on the horizon, you need to hear this. Not from somebody who's just trying to sell you another course, but from somebody who's actually lived it and who knows how this rodeo ends. So here's the first thing that I did not see coming. My cash flow looked fine on paper, right up until it didn't. You see, on paper, I was pulling in a decent rent every month. Lots of properties, so lots of income streams. And it looked pretty solid, right? But here's what my months actually looked like. Okay, so this is the first thing that when I really didn't see it coming. And now what we're looking at here right now is going to be my spreadsheet that I use to do all my analysis of all the rental properties I own. And if you want a copy of this, just drop spreadsheet in the comments and I'll make sure that I get you a copy of it. So here we go. What we're looking at here is a piece of real estate that I actually own. Now, the asking price originally was $320,000. As you can see, current annual yield is 7.61. Now, when I talk about the yield, I'm talking about the income minus expenses over the original asking price. Debt coverage ratio, 1.7, not bad. And the debt coverage ratio is the monthly income over the mortgage payment. So as you can see, 1.7, that's not a bad price. Now, I wanted to use this property as an example that this is one of my better performers. This one here is actually a suited basement. So I've actually got 2 sources of income off this property. Some of the other stuff, single family, will not generate these types of rent in this market. So as you can see, rent required, my rent is $3,000 a month. Property taxes on this property, about $3,600 a year, $300 a month. Insurance is about $1,200. When I first started buying real estate, this was half that. So yeah, I get that inflation will jack prices a little bit, but this is a place where you can really run into issues if you're not budgeting on your costs going up at this type of rate and your rent not following suit. I've got property management. I've got 5% in for vacancy allowance. Now that's a little bit of a savings when a place goes vacant. Now I've got a little bit of money in the kitty that I can cover off the expenses if I don't have any revenue coming in on that. Repair and maintenance as well. I'm throwing a little bit into the kitty at this point, 5% for a little bit of repair and maintenance. Now that's going to be about $1,800 a year. Again, remember these numbers when we start getting into the spreadsheet a little bit more. So when I get down here, now I'm talking about financing. You can see that where I'm posting that I'm getting a 75% mortgage on that. I know some of my US followers, I've heard a lot about you can get 0 down properties down in the States. In Canada, that's not the case. So financing, I had to get the mortgage for 75% of the value of the property. Interest rate on this particular mortgage back in the day was 3.75%. So the loan amount was $240, payments about $1,234 a month. And the cash flow is just about $800. So if you look at the cash flow, that's going to be about $9,600 a year. Now here's your mortgage balances right here. And you can see that $40,000 in 5 years is getting paid off, which leaves me about $8,000 a year in debt pay down. So the total debt pay down and cash flow on that property is about $17,600 a year. Not too bad. So here's where it gets sticky. Let's say for the sake of argument, I have a furnace blowout. $4,800 for that furnace. Now, all of a sudden, you can see that my cash flows dropped by about $400 a month. And I'm also only making about $13,000 off that $80,000 investment rather than $17,000 originally. Okay, that's one thing. Now, let's say instead of that furnace, let's say I need a new roof, and that new roof is $8,000. Now the cash flows down to $130 from my original almost $800 on that property. So now you can see where things are starting to get skinny on that property. And the mortgage pay down
That's all wrapped in the property. You can't access that unless you refinance it, which leads to a whole bunch of more issues. Now, let's say, for the sake of argument, the tenant moves out. And even good tenants, after they move out, they leave some issues that you're going to have to take care of. Typical reno is about $6,000. Now, that's going to cover some paint. That's going to cover some probably flooring. Maybe they left it okay, but they still need a little bit of cleaning. And let's say that's $6,000. And it takes me a month to do it. So now all of a sudden, I'm also not getting rent for that month. Here's where things get rough. Look what happened to my cash flow here. And that's money that has to come out of your pocket. So where are you going to get that money from? Now you're going to have to be dipping into your savings. Maybe you're going to have to be pulling off the line of credit of your house. This is where things start to really run into issues. And with the amount of real estate that I had, I found this happening a lot. And I was really dipping into my line of credit to cover all the bills at the end of the month. And if you've only got one or two properties, you might find yourself dipping into your line of credit. You might be dipping into your savings and money that you had earmarked for your retirement, or maybe that family vacation you've been planning for years. And this is where the problem lies with real estate.
I wasn't failing. I had good properties. I was doing exactly what I was supposed to be doing. But the cash flow that was supposed to be passive was just about as passive as a second job. And here's the part that really gets me. When nothing's going wrong, rental income feels pretty easy, almost passive. But once you retire, your income needs to be dependable every single month. Not just the months where nothing breaks, nobody stops paying, and the furnaces keep running. And here's where it got really uncomfortable. After years of the cash flow roller coaster, I found myself doing something that I told myself was normal. I started selling a property every year, not to upgrade, not to reinvest, but just to pay down my line of credit and keep the whole machine from collapsing. And I told myself this was strategic. But here's the truth that I didn't want to face. Selling assets to cover operating costs is not a strategy. It's just a slow liquidation of your business. And every property I sold to service the debt was just one less asset producing income, one less property in the portfolio, and one step further away from the retirement that I'd planned. And the really dangerous part? For me, in my little brain, it felt normal. It felt manageable because it was happening slowly. And one property a year doesn't feel like a crisis until you really sit down and do the math on where that ends up. And that's what finally woke me up. It was August of 2022, and I was sitting at my kitchen table and I was running the real numbers, not the optimistic ones that assume everything stays stable. And that's when it hit me hard. If I kept selling one property a year to service the debt, and if nothing changed, I was going to have every single property that I owned sold, and I would be flat broke by the time I was 80 with absolutely nothing to show for all my years investing in real estate. And believe me, that's not a retirement plan. That's a slow disaster with a finish line. And quite honestly, I was tired of trading my adventures and all the fun experiences that I had planned for another reno or a bunch of real estate drama. So that afternoon at the kitchen table, I made the decision that I was done waiting and I was done pretending that my real estate plan was going to fix itself. Now, before we go much further, I want to be really clear with you. I am not telling you to sell all your rental properties tomorrow. I still own real estate. I just stopped pretending that they were something that they're not. And what I started building instead is something completely different. And I started promoting digital education programs. Okay, now before you click away, just hear me out for a second. I am not talking about becoming some fancy influencer. I'm not talking about doing goofy dancing videos on TikTok. And I'm definitely not talking about creating anything that's super complicated. But imagine for a second that you owned a piece of real estate where you didn't have to deal with tenants every day. You didn't have all sorts of recurring bills like property taxes, insurance, or utilities. And you could get it all set up for less than the cost of your real estate lawyer and be up and running and possibly even in profit mode before you would have even taken possession of that new rental property. I spent thousands learning all about real estate investing. And far too often, those courses I took were just lead ins to buy an even more expensive course that promised to offer me even more secrets to guarantee my success. Here's a spoiler alert for you. They rarely did. But with the digital education program that I follow now, all the cutting edge training is included. I get full mentorship and training weekly. And I get to sell this educational program through master resale rights, which means that I make 100% profit. I don't have property taxes, insurance, utilities, nothing. Now, if that got your curiosity going a little bit, hop down into the description and hit the link and grab your own copy of my Freedom Formula Blueprint. It's totally free and it's going to show you the nuts and bolts of how you can set up your own digital education program without having to be some kind of a fancy tech wizard or an influencer. Now, I want to be straight with you on something else too. I'm not standing here as somebody who has it all figured out. I'm figuring it out right alongside of you. But here's the truth, the direction is right and the model works. And since you're a real estate investor and you know business, here's the thing. The digital industry is projected to be a $3 billion a day industry by 2030. And if I'd known about this 10 years ago, my little discovery in August 2022 would have looked very different. So here's what I want you to take away today. First of all, the cash flow spreadsheets were lying to me. Rental properties look like passive income, but believe me, they're not. Secondly, I was selling assets just to survive and stay one step ahead of the banker, and I was calling that a passive investment strategy. And third, when I finally ran the real numbers, the picture told me I needed to change course. So I did. Now, if any of those things sound familiar, I want you to hear this. You're not stuck in this trap forever. There's a better way to build income that doesn't require you to keep grinding at the expense of your retirement and the life that you actually want. And the Freedom Formula Blueprint will show you exactly how I'm building it right now in 2 hours a day from anywhere I choose to be in the world. Now, it's completely free. It's about a 5-minute read, and it will let you see if a digital education program with master resale rights may be a better fit for you than another piece of overpriced real estate. Because honestly, do I know for sure if this is for you? Really, I don't. But isn't it worth at least having a look? And if it's not for you, at least you can make a decision from a position of knowledge, knowing that you did your due diligence, just like you do on a real estate investment. And if this video made you think differently about where your rental portfolio is actually heading, here's what I want you to do. I want you to go down and check my next video where I'm going to walk you through exactly how you can learn the high income skills to create reliable legacy wealth with the digital education program without having to deal with all the drama of a rental property. So go check out my next video now, and I'll see you there.